Welcome to Bloomberg Quint. We're here to wrap the markets for you. It's finally the day when bears took over and you had the Nifty correct by as much as 1% and it ended below that 9850 levels. But before we head to what really dragged the Nifty index lower, let us address the HUL earnings which have just come out. Agam, beat on all counts, whether it's profitability or margins. What about the volumes?
Well, a marginal beat, I would say, not a great one. We were expecting flat volumes, and flat volumes is what we've gotten. We have seen a little bit of a growth as far as revenues are concerned. This is because of some price hikes in certain categories that HUL has taken. On the bottom line as well, we are looking at some amount of growth, but well, no fireworks here again. With respect to margins, it's held on to the mark of 21%, so that's a positive once again. On the whole, nothing out of the ordinary, a marginal beat on the back of which we could see perhaps a little bit of an up move when it comes to HUL.
Okay, on that note, let us bring in our guest, Mr. Umesh Mehta, Head of Research at Samco Securities. Thank you for joining us, Umesh.
Thank you.
Umesh, we were just discussing a while back that the Indian markets are looking extremely overheated, and you belong to the segment of markets which believe that the correction is due very soon. What are your biggest worry factors?
Fine. So, when we see history, when bull markets have given sharp corrections, and so some of the characteristics are so unique, something off will fly from the sky and market will start correcting. So, we do not know currently what that reason will be. For example, Chinese market gave a sharp correction of 10% just based on a conference, just based on government conference that was going on. And there a statement came in that the regulatory tightening will continue for 5 more years in the financial sector. As such, this news makes no sense, no relevance, nothing is good, there is no impact on the earnings, but the market corrected. So, similarly, we are also going to see some sort of events, something that is happening, and market will catch, market will be caught off the guard and market will correct. We are seeing some amount of hysteria in some of the pockets. For example, newly listed IPOs the last week, such massive run-ups, these are the signs of hysteria and the subsequent correction fall that we had seen. So, bulls, better to be aware, we can see this sort of phenomena happening in some more sectors, but currently market is complacent, market is thinking that domestic liquidity is there and that is going to keep the music on, but something or the other, liquidity, if government comes in and divests a huge amount of money, and if they do, or if huge number of IPOs come in, that is the time liquidity will be sucked, and that is the time market can correct, and then that is the time it can come down.
Okay, fair enough. Let us also take a look at some of the biggest movers as far as your Nifty index are concerned. You had Eicher Motors, Asian Paints, HCL Technologies lending some support, but the stock of the day clearly is ITC. That stock ended as much as 12% lower. This was the biggest drop in as much as 25 years after the government announced additional cess on cigarettes. ITC itself contributed to a loss of 92 points on the Nifty index. Not just ITC, in fact, the entire cigarette pack was under pressure. VST Industries, Godfrey Phillips, all of them also took a knock of about 4 to 5%. Besides that, you also had Reliance, which saw some profit booking coming in, snapped its 7-day winning streak post some reports of the government imposing penalty. You also saw stock of Ultratech Cement, it closed about % lower. We saw some profit beat coming in, but that was aided mainly by other income, but volume growth remained disappointing. Umesh, on July 1st, there were multiple target price hikes coming in on ITC given the expectations of that overhang going away. So, any investor would have actually entered ITC at those levels has clearly seen losses. What's your call on ITC post this correction and at sub 300 levels?
Correct. So, I think magic of market, ITC has really displayed it very well. GST, the moment it was enforced, and on next day Monday morning, market ITC was a gap up opening and it had gone to around 357 on hopes that there is reduction in effective taxes, and so the belief of the market was that consumption is going to go up, and today the anomaly has been corrected and the prices are, the taxes are back to the previous level, and market is now correcting stock by 10-12%. So, I think nothing has changed in terms of the pricing pattern, the taxation, steadily government has been rising it. Do we say that petroleum products also enjoy more tax levy, around 50%? Have we stopped using petrol over a period of time? No, because there is demand inelasticity, taxes are not going to impact. ITC for a fact that is generating huge cash flow and it is available at fairly reasonable price. So, this is a stock wherein investor should come in, buy with a vision of 5-10 years, because down the line what we see is markets are having so much disruptions, technology. Any businesses which has a life of, if it is visible that 10 years, 20 years businesses can stay, something like ITC will stay on, and the premium valuation which these stocks will get is huge. So, currently ITC is trading at around 38 PE multiple, and stocks like Lever and all other FMCG are trading at around 50 plus. So, there is huge margin of safety, there is a lot of visibility, and investors should, in fact, this is the time to invest it and invest for the long term.
Okay, so you're bullish on ITC at these levels, fair enough. We also saw a strong set of earnings from ACC yesterday. Ultratech saw a good set of numbers today. However, there was a tad disappointment as far as volume growth is concerned. How are you viewing the cement pack now?
Correct. So, the market was ahead in terms of stock price. Stock prices had already gone up, but earnings were not coming. So, last quarter and previously before that, earnings growth was not visible. But now we are seeing some amount of earnings that has kicked in, and I think government is the biggest spender, and so long as the government keeps on the engine, the cement stocks will remain at elevated level. The moment private consumption kicks in, that capital building starts, that is the time we will have some fireworks in cement stocks. But for the moment they are fairly priced, there is not much scope for higher upside, but at the same time the downside is also capped. So, I think they will perform in line with the market.
Fair enough. Let us also just have a quick look on the mid-cap movers. You actually have cement stocks which were under significant pressure and also leading the pack of losers on the Nifty 500 index, followed by GVK Power, Nitin Fire and Videocon Industries, all of which lost more than 5%. On the winning hand, you had HCL Infosystems. It rallied as much as 19% on the back of reports of tie-up with Apple. Of course, their company did clarify saying that they had not entered into any definitive merger, but they're looking out for such options. But that stock managed to hold on to its strength. KRBL also rallied for the second straight day, up 10%, followed by Future Consumer, HT Media on the back of its earnings, and Infibeam Corporation. But overall, the market breadth remained negative with just one gainer for every two losers. Umesh, my final question to you, are there any pockets where you're actually seeing value even now, or which are some of the themes that you'd like even at current levels?
So, yeah, value in terms of pharma as a sector has value, because US FDA most likely will now give clearance to the ANDAs that the companies have filed. So, I think that growth lever is still not priced in, and that will give the kick in for the pharma sector. The second is IT. Now, IT, it's very hard, whether they will, the IT will have a lift off based on how the growth is picking up, but at least downside is protected. So, to that extent there is margin of safety. Whether or not it will perform, it is anybody's guess, but currently that visibility is small, is less, but valuations are attractive. Therefore, pharma and IT sector offer value buying for a conservative investor, especially when the markets are at elevated level. So, I think these two sectors will act as a defensive, and if market falls and if it corrects sharply, I think this two sector will outperform, and they will make investors happy.
All right, thank you so much for all your advice, Umesh. That was from Umesh. Big buy, value buy is what the Samco Securities is seeing as far as ITC is concerned. So do keep a track on that stock. We could see some bounce back coming in the next few days, given the kind of correction that the stock has seen, and some value buy advice coming in there. That apart, we'll also be keeping an eye on a host of earnings. You have Bajaj Finance, Canara Bank, Havells India. And we will bring you more on that tomorrow, but that brings us to the end on this edition of Market Trap. Thank you for watching.